So, Elon Musk just dropped another bombshell, a mega project that has Wall Street buzzing and has sparked a huge debate. It's called Terafab. And honestly, it's forcing everyone to ask one massive question about the future of his entire empire. All right, let's get into it.
First things first, what is Terafab? Well, put simply, it's a gigantic factory set for Texas, and its job is to build the next generation of AI chips from scratch. But here's the kicker, the thing that makes this so different. This isn't just a Tesla thing. Nope. It's a joint operation between Tesla, SpaceX, and xAI, all of Musk's heavy hitters under one roof. That's unprecedented. And that right there, that crazy collaboration, is why everyone is arguing. You see, the market has pretty much split into two camps. On one side, you have people saying, this is it. This is the final signal. The Tesla-SpaceX merger we've all been waiting for is finally happening. But on the other side, people are saying, hold on, what if this is something way more clever? A strategic play that gives Musk all the perks of a merger with none of the headaches.
Okay, let's tackle the dominant theory first. This is the one that most investors, both here in the US and overseas, are putting their money on. The idea is that a full-blown merger isn't just likely, it's pretty much a done deal. And Terafab is the thing that's going to push it over the finish line.
Now, check out this number, $25 billion. That's the minimum estimated price tag to get Terafab up and running. And for the folks in the pro-merger camp, this number is everything. Their argument is pretty simple. There is no way Tesla can, or even should, try to carry that kind of massive cost all by itself.
So their logic really boils down to three main arguments you see here. First up, the tech integration. I mean, imagine building chips for Tesla's robots on the ground right next to the chips for SpaceX's satellites in orbit. The synergy there is just immense. Then you've got the point we just talked about, sharing that massive capital expense. They believe bringing in SpaceX and its healthy cash flow is an absolute must. And finally, there's a pattern here, right? xAI already got folded into SpaceX, so a lot of investors see this as just the next logical step in rolling everything together.
And this quote, it just perfectly captures the feeling out there. This isn't just some dry financial analysis for people. It's a powerful story. You hear phrases like the mother of all mergers getting thrown around everywhere. It really shows you just how convinced people are that this is the end game.
But what if that's not the whole story? What if that's the wrong way to look at it? You've got a growing number of analysts pushing back, saying a quick merger would actually be a huge mistake. They think what Musk is really building is something far more flexible, something more pragmatic, a strategic joint venture. Now, the key thing to understand here is that this is not your textbook corporate joint venture. Usually a JV means you have a bunch of different companies with their own CEOs, their own boards, all trying to get on the same page. It can be messy. But with Musk's companies, you have one CEO across all three, Elon Musk. That means you get a unified vision, you get seamless collaboration, you basically get the benefits of a merger without all the legal and financial chaos of actually doing one. And keeping them separate gives him two huge advantages through a little something called risk isolation. First, it protects the talent. See, SpaceX has to follow these super strict security rules called ITAR, which means most of its employees have to be US citizens. If they merged, those rules could cripple Tesla's ability to hire the best engineers from around the world. Second, it protects the money. It keeps SpaceX's insane spending on rockets and space stuff off of Tesla's financial statements. That stops Wall Street from freaking out that all the future profits from, say, robotaxis are just going to get sucked up to pay for missions to Mars. So, if this JV model has so many upsides, what are the actual dangers of jumping into a full merger right now? Well, as it turns out, the fallout could be pretty bad.
Let's just walk through the risks here. First, market perception. Investors could get spooked, thinking all of Tesla's hard-earned profits are just going to become a piggy bank for SpaceX. That could hammer the stock price. Then there's efficiency. I mean, trying to smash together the cultures of a space company and a car and robot company, you could create a bureaucratic nightmare that just grinds innovation to a halt. And last but not least, a merger would light up red flags everywhere for regulators, triggering major antitrust investigations and all sorts of accusations.
Okay, so on one hand, we have this very emotional, very popular belief in a merger. And on the other, we have the cold, hard, pragmatic logic for a joint venture. So what's the real path forward? Let's put these pieces together and figure out what's most likely to happen. The smartest bet seems to be on a two-phase plan. For the next few years, say through 2027, we're probably going to be in the flexible JV era. Terafab will run as its own thing, letting the companies share the tech and share the costs, all while staying separate. It gets the best of both worlds. Then, once you look out to 2028 and beyond, yeah, a merger starts to look like a real possibility. but probably only after Tesla's own value has shot up, thanks to things like robotaxi and Optimus, and once some big questions about corporate governance get sorted out.
So in the end, Terafab probably isn't the starting gun for an immediate merger. It's more like a masterstroke of pragmatic empire building, laying the foundation for a merger way down the road. Which of course leaves us with the one ultimate question that hangs over this whole thing. In a setup this unique, with one person sitting at the very top of it all, who really gets the final say? The shareholders or the CEO?